Welcome to Markets Now. I'm Michelle Rook along with Mark Schultz with Northstar Commodity. Mixed trade today in grain and livestock futures. Row crops higher, wheat lower. And then in the livestock, cattle setting back, but hogs to the plus side. And Mark, let's talk about soybeans first. It looks like they're getting pushed here and we're recovering off of dry weather as well as maybe some better than expected new crop exports.
Well, the export business has been good, Michelle, and it's been good now for at least even for the new crop, obviously, but it's been pretty solid for the last 3-4 weeks. So there's at least interest in buying the beans. We're getting that activity taking place. As far as the crop is concerned, obviously we've had good rains. The last 10 days has been pretty good, but overall you're still going to have some dry pockets in here, minimal at this time period. You do have a forecast that is going to be hot and dry, and I will say that you can't get any drier than the forecast because there's virtually no rain for a large portion of the Midwest in here. The heat's going to build. We're going to get into the 90s. Maybe into the 100s in the southern Midwest, and that may take its toll. What it can do with the beans is just slow down the growth in the pod setting and or a little bit on the pod fill. And you may not get that cluster of beans on top to fill out if we were to stay on the dry side for a good 10 to 12, 10 to 13 days. I still think if you go with the dryness beyond and into Labor Day, even if you cool temperatures down, but you don't put any moisture, you're probably going to do some damage to the beans. So beans first, corn second, as far as possibly doing some damage there. It could only be kernel fill now is about all you could do with the corn crop. I think it made it through pollination, very good shape. So now it'd just be a function of whether it can finish off as we go into the end.
So with that being said, Mark, technically, how far do you think the soybean market can run here if it stays hot and dry? Because we've been running up against 200-day moving average resistance. And, where does corn go from here?
Yeah, let's start with the beans. November beans were basically 1338, 1340 is your short-term resistance. If you clear that, then I think you go up and there's a gap that was left on the charts. That's about 1380. 1382 in that zone. So I think you can see a market go up there. Now, if by chance you were to start seeing some concern and the national yield were to slip another bushel per acre, then Katie bar the door, you might see something that would have to go up to ration demand. You might start seeing something move up into the 1440 area. Soybean prices in China have been on a pretty good tear here in the last 10 to 11 weeks. So we're getting closer almost to the highs for the year on bean prices in China. So something to watch there. And they've been the active buyer of U.S. beans as of late.
Yeah. And we say China, not China, corn market trying to follow soybeans here today. Weather's a factor, as you mentioned, and exports were just a little bit better this morning, weren't they?
Well, the new crop corn has at least started to get a little bit better, some activity. It's the problem with it still is that the wheat market, that spread is narrowed and we just don't see enough on the wheat to pull it up. If wheat would start to firm, I would think it'd be a little bit more positive for the corn market in here. Basically, all I think you can do on corn is just the kernel fill. And until we start seeing somebody pick corn and tell me that the yields are disappointing, then maybe I'll turn my tide a little bit more to the friendly side. So far, that just has not happened. The corn yields have been coming out pleasantly pleased in the southern half of the U.S. as the harvest picks up. So corn just the demand is getting a little bit better and probably will get better once you get into the October, November, December time period. But for right now, it still is a high enough yield at 175. We start going higher. I mean, we're going to have a 2.3 billion bushel carryout. If it tries to go higher, to go lower, you're going to have a national yield fall below 171 to start having some type of impact on price.
Yeah, so that's a headwind for the corn market as well as the fact that we have a lower wheat market. So let's talk about wheat. Is this technical selling or is there really no reason for anybody to buy wheat right now just because we still have grain moving in the Black Sea?
Yeah, the grain is still moving. And obviously, we shut down the grain corridor with Ukraine. Russia shut it down. But by and large, there's still grain moving. It's just not moving at the same pace as it once was out of Ukraine. In the meantime, Russia has just fire selling wheat at low levels regardless, and it generates dollars for them. So to me, they're going to continue to keep moving the wheat. Then you got the European wheat market, and we're getting close to that, but we're getting close to it because we're at $5.90 a bushel on Chicago wheat. And it's just, I mean, we go down with ease. We just having a hard time moving up to the upside. Now, maybe you get something later on. Australia on the dry side, Argentina still on the dry side. Brazil looks good in the southern part, so it's helping out their wheat crop in that region. But other than that, we're still going to have to be something into maybe mid to late September before you can really actually start looking at some possible yield losses coming into the southern hemisphere. India might be another one to watch. They look like sound like they want to import some wheat versus exporting wheat. The monsoon in the western half of India has not been very good. Doesn't look very promising, at least for the next 10 days. Once you start getting to the 20th of September, it pretty much peters out, and that's it. So they will need some more moisture here in order to change the tide in that area of the world.
Yeah, I know India said this morning they're looking even at Russian wheat. So we'll see how that develops. This is all kind of it with the backdrop of these China economic concerns. And, how much of a concern is that for this commodity sector here? Is it already meaning less demand from China for U.S. goods?
Well, it's less products that China is having a hard time moving products. So their currency has now declined again. So I believe it's now to 16-year lows against the U.S. dollar. So it's all an attempt to try to spark better demand to come over and buy Chinese goods. And of course, if China can then sell more of their goods, they would have cash, and then they'd probably start looking to buy more product. I would say in the big scope of things, they probably had an okay wheat crop. The corn, they had some heavy rains, but I would tend to think that generally would tell me they're going to have an okay corn crop as well. Probably beans are fine. They do a lot of more import in beans. They don't produce that much. So I don't think that's really the issue yet out of this one. I think right now, economically, globally, you want something to start showing at least some support in the global economies. That would be your worst thing overall. If it really spilled all across the globe of problems, then we'd start seeing our demand in the bigger picture start to taper off.
And when we talk about macroeconomic concerns, obviously the cattle market has been sensitive to that. So cattle market looks tired here. Is it because of what I just said, or is it the steady to wheat cash trade that we've seen this week?
Well, the cash trade is still doing fine. I mean, we're 179. We're going to be about steady to $1 lower than we did a week ago. But keep in mind, August and September typically are not your better time periods for demand on beef. With that said, I would still say to you that beef prices at the grocery store, to me, just don't look like they're that expensive yet. So it's still doing fine. We're missing out is our export demand still running 14.5% less than it was a year ago at this time. I don't see anything improving. If the economies can't find some stability and continue to weaken, and the dollar has moved up, not lower like I thought we would be going, it's not a good combination. So I don't expect the export demand to get any better. With all that said, any way you cut it, we still have to we're producing less beef. We still have to lower domestic demand in this here in order to keep the beef supply at adequate levels. Well, it'll be interesting next week when cold storage comes out, because every week or every month this year, we have gone lower in beef supplies in the coolers.
Well, you can't put it in there, Mark, if you don't have it. And I don't, if that has something to do with it or not. What about the hog market? You mentioned exports. They were better this morning. So did that give us a little bit of a pop here today? Or is it just the fact that the futures are at a discount?
We've had a correction in the hog market, and that's typical. It is not uncommon for prices to peak and the pork cash and the cutouts peak late July, early August. That's pretty much a normal seasonal pattern. And then you get a weaker market until you get into around Labor Day. And then from there, we'll see if we start building. But the futures are pretty well discounted to where the cash and the cutouts are, even though they are still going lower. So to me, if they continue to work a little bit lower, we should see the demands, which has been pretty good, especially in the export market. Sow slaughter has been on the rise here for the last 12 weeks. at a pretty good clip. And when you look at it on paper, even with the futures where they're at and the feed needs where it's at, on paper, there's no profit in the hog business all the way to April of next year. So I would suspect if things have to improve somewhere, or we're going to continue to see the liquidation in the U.S. hog herd.
All right. Well, eventually that should be supported, but just not yet. All right. Thanks for joining us, Mark Schultz, Northstar Commodity. That's Markets Now.